Hello, everyone. Good afternoon if you're tuning in from Southeast Asia, or good evening if you're from Australia and New Zealand. My name is Maurice Chong, and I'm Market Head of ACCA in Australia and New Zealand. Welcome to the final day of the ACCA Regional Student Virtual Conference. Tonight, we're very privileged to have both Esther Tung, our Regional Head of Education for ASEAN ANZ, to start off the session giving you a quick overview of the ACCA CBE exams, followed by Dylan Moldrich from the Australasian Business Institute to speak to you about the Strategic Business Report exams, to give you some tips about how you can actually prepare for your SBR exam. In the course of presentation, please feel free to use the chat box to enter any questions that you have so that we might be able to address them accordingly. And I just want to take this opportunity as well just to have a quick reminder for those of you who may not have renewed your student membership to make sure you go through your My ACCA to renew your membership. So as you can see on the slide deck over here, sit back, step out, and make sure that you use this opportunity to really learn as much as possible from Esther and Dylan. Without further ado, I'll pass you over to Esther. Esther, please.
Thank you, Maurice. Hi, everyone. Good to see you turning up at this time. So for this session, what I'm going to do is I'm just going to talk through quickly on how you can launch your remote exams on exam day. So in Australia, we are having remote exam. So this is just to give you a quick overview of what's going to happen on your exam day itself. Okay, first of all, just a quick update. So this is really new in terms of the bathroom break that we have put in place. So you are now permitted 1 5-minute bathroom break. Okay, and in order for you to take the bathroom break, all you got to do is just inform your invigilator in the chat function to say that you're going for a bathroom break. Then the exam timer will continue to run during the bathroom break. When you return to your desk, just use a chat function to tell your invigilator that you have returned. Okay, and then just continue with your exam. However, your invigilator could be asking you to verify your ID again. Okay? Now, it is important to note that the 5-minute bathroom break is part of your exam duration. So take it only if it's necessary for you to do so. And you please do not exceed the 5-minute time limit, because that may result in your exam being terminated. Okay, secondly, I'd like to talk a little bit about some aspect of the exam which is different from the center-based exam. Now, a key important area is what is allowed on your desk. So calculator, yes, is allowed. And you should ensure that your calculator is included in the photograph of your desk. And no scrap paper is allowed on your desk. So therefore, please, use the scrap pad function on the practice platform to understand how you can maneuver and utilize the scratch pad function. In the exam itself, there's also a digital scratch pad function for you to use if you need it. Okay, this is how you can set up your equipment on exam day. Again, the infographic is on our ACCA website, okay, for remote exam on ACCA Global. But in a nutshell, what you're seeing here is essentially you're allowed 1 screen, 1 keyboard, 1 mouse if you need it. Okay, and for desktop is 1 setup. For laptop, there are 2 ways to set up your equipment. And as you can see, the calculator is visible on the setup. You're also allowed a clear glass of water or a small bottle of water with the label removed. As students provide more questions to us, we will continue to update the FAQ. Okay, for example, this has a sample of the FAQ question here. Can I have photographs and pictures on my wall? Now, that is a new addition to the FAQ. So I would encourage you to look at FAQ to see if there are new updates that you need to be aware of. Okay, So now I'd like to talk about launching your exam on exam day. Okay. So before the start of your exam, okay, please take your comfort break. And remember, you're only permitted to take 1 5-minute bathroom break once you start the exam. And you can only start the exam 30 minutes before your appointed time. If you try to log in earlier than 30 minutes, the exam will not start. Okay? Okay, so to start your exam, you go to access your exam planner. And in your exam planner, then choose book an exam. And then choose launch the exam. So this launch button will not launch if you log in before 30 minutes. Right, then you go to click on the exam that you want to launch, which is booked computer-based exam. Okay, now then you click begin exam button. Okay, now once you have done that, you'll be prompted to download and run the exam delivery and remote invigilation software before performing the system test. From this step onwards, what you're going to be seeing will be very similar when you did your system test. So just follow through the same instruction, the process, okay, to allow the verification of your ID and your work area. So you need to actually copy the access code. Now, once you have done that, then you'll be asked to enter your phone number. It's important that you enter the phone number correctly, because should the invigilator want to contact you, it will be via this phone number you have entered. Okay, so this is where the check-in process will begin. Okay, first of all, confirm you're over 18 years old, which I think most of you are. If you're not, then you'll need your parent or your guardian to be present for ID verification. Okay, now then the system test, the check will run. Okay. Okay, then you have to then take some pictures of yourself, your ID, and your environment. Okay, and that's where you can use a mobile phone to help you take those pictures. Okay, and then so make sure that your face is within the oval when you're taking a picture of yourself. You'll be asked also to take a picture of your ID. So acceptable ID will be passport, driver's license, national ID cards. In terms of your workspace, you have to take 4 pictures, front, behind, left, and right. And for the picture they're taking in front of your workstation, as it says here, be sure that your calculator can be clearly seen. Okay, now, by this stage, your check-in process is almost completed. And then you'll be presented with a reminder of some of the exam rule. You'll be asked to check a box to confirm. Now, you will then be reminded to close all your application except for Finder and On View. At this point, once you've done all that, the check-in process is now completed, and then there'll be verification, okay, in the background ahead of your exam launching. Now, this whole verification process can take up to 15 minutes. If you're waiting any longer than 15 minutes, then please contact us. We will provide the contact information on the website and in an email communication to you next week. Okay. Now, your exam will be launched by the invigilator, and then you can start by reaching all the pre-exam screen. And then during the exam, if you require help from the invigilator, then use the chat function to get connected. Okay, I hope this is clear. Now, this information I'm sharing with you is again found on the remote exam website on ACCA Global. Okay, now, a lot of you are doing the SP level, so I'm just going to go through very quickly the resources available in ACCA that support your exam preparation. Okay, so this is just a timeline for the rollout for ASEAN and ANZ, in which case in Australia we're having computer-based exam because of the remote nature of your examination. Okay, so if you're doing SP CBE, now then the resources available to you would be on the support resources page on ACCA Global. Okay, if you scroll down, you can see a learning and revision section. And if you click on CBE preparation, there are 4 short videos, okay, that you can view. So these videos help you to think about, your exam strategy, how to manage your workspace effectively, and the different technique you could be using to plan and answer your exam. Each video is only about 4 minutes long, okay, so it won't take up a lot of your time, and there are very useful guidance provided in the video. Okay, and another important resource that you should be looking at is the ACCA practice platform. Okay, so the platform is important because you can use it to sort of simulate the actual exam environment, and then you also be able to tell if you are comfortable with the screen size and the maneuver of the various exhibits, okay, in the platform. So you got to be comfortable in with your laptop, okay, when you're practicing using the CBE platform, and because you'll be using the same laptop when you're in the exam room, okay, or in the exam condition. Okay, so make sure that you get enough practice so they are comfortable with your machine, and therefore you maximize your chance of success on exam day. Okay, then we'll also provide some guidance, okay, on how to manage your workspace effectively. Okay, so this is a YouTube link, okay, that you can go into to have a look. The slide deck that I'm showing you here will be sent out to you post the conference, so you can then Google this link, okay, when you receive the deck. Now on our website again, we now have developed a 1-pager, okay, resource guidance. So it tells you all the different resources that we have to support your SPCBE journey. And these are the webinars that is for August. Some of them are already over, okay, but no worry. If you go to On24 and register, you can still look at this video on demand. Okay, so that I've come to the end of my presentation. So I'm going to hand the time now to Dylan. Thank you.
Thank you very much, Esther. Can we please invite Dylan to share your presentation?
Hello, everybody. First question is, can you hear me and can you see my presentation? Maurice, can you hear me? And can you see my presentation?
Loud and clear. Good. Yes.
Yeah. So thank you, Esther, for those words of wisdom. What I'm going to do, everybody, is I'm going to take it from Esther, and I'm going to show you how you can apply using the computer-based examination processes into your business reporting exam. So I'm going to show you how this is going to work with regard to strategic business reporting. Okay, so let's get going. So to introduce myself, my name is Dylan Moldrich, as Maurice already said. I'm based in Australia. I'm based in Sydney. So I basically teach more for the Australian and New Zealand students. I work for I tutor for a learning provider called Australasian Business Institute. What I'll do with you today is I'll go through 6 small areas of learning. I'll first talk to you about the computer-based exam as it applies to strategic business reporting. I'll take 4 examples. I'll look at how we can do this. For an example on IFRS 15 revenue, then another one on IFRS 16 leasing. I'll look at IFRS 10, the concept of controlling consolidations. And just to show you how it works in Excel, I'll take you through a statement of cash flow. These questions are not going to be extremely difficult, but more to show you the process of how you can do this in a CBE environment, okay? I'll close my session just talking about how COVID-19 impacts on all of our financial reporting issues. In total, I won't take more than an hour. I'll try and hold it to 40 minutes, okay? So bear with me for the next 40 minutes to an hour, and let's go through these processes. So effectively, for business reporting, you are not going to get any big number crunching questions. 5-6 years ago, I used to get those huge questions, but now the process is changing. You're not going to get any large number crunching questions. What you will get is effectively some very short mini case study type questions. So it's easy to read, easy to comprehend, and easy to answer in a computer-based environment. As Esther just now said, no paper is allowed. So no writing, no scribbling, no making notes. So you got to change your thinking process. You got to just work on the computer. And like Esther said, start getting used to that now. Put the paper and pen aside and start getting used to keying in your answers on the computer. You're allowed 15 minutes to pre-read your exam paper before you start answering. So use that 15 minutes wisely. Read the questions, and then you will have a sort of a first gut feeling. I'm comfortable with these questions. I'm not so comfortable with those questions. Okay, and then okay, how you're going to manage your effort and your time. Now, with regard to answering the questions, if you like, you can answer the question that you're most comfortable with first, your second best question second, your third best question third, and your least best question fourth. If you like, you can do it that way. Or you can just say, I'm going to do question 1, followed by question 2, followed by question 3, followed by question 4. That option is yours. When the marker is marking it, the marker knows exactly what question you're answering. Okay. Remember, you can always go back and you can always reopen a question and rework on the question. Okay. So there's this little thing called the scratch pad. You can use that if you want to keep a note of things. Write it down and keep a note, and you can always go back and edit a question. Obviously, it's true for paper-based or computer-based. Time management is critically important. So that's sort of the need to knows for your business reporting exam. Now, when you go for your exam, you're going to get, this, you're going to get 4 questions. Part A carrying 50 marks, part B carrying 50 marks. Part A will have 2 questions. Sometimes the first question will have 30 marks. The second question might have 20 marks, but it can vary. And part B will have 2 questions. Usually each question carries 25 marks. Look at this question like a number of small questions. That's the first thing you need to do. Don't get overwhelmed by one huge question. Inside this question, you will find 3 or 4 or 5 small questions. Okay, so look at it that way. So when you see, like I've put in my slide there, when you see question 1, understand this question 1. It'll have part 1, part 2, part 3, part 4. So question 1 will have information. I've called it there exhibit 1. That's the storyline for the first part. Then exhibit 2, information on the second part of a question. So the first part, for example, might be what did apple do? Second part might be what did orange do? Third part might be what did banana do? Fourth part might be what did mango do? You're with me? So understand those subcomponents of the question. Then for each of those pieces of information, there will be questions. So from exhibit 1, what did apple do? There'll be a question. You have to give the examiner the answer. What do you think should be the answer for that question? Part 2 might be about what banana did, and there might be 2 questions there. Question number 2 and 3. You have to give answers to that. Then what did mango do? Answer those questions. What did pineapple do? Answer those questions. Okay. So look at the question like a number of small questions, and then understand the requirements for each of those questions. And then you'll find, look, I've got not one massive question, but 7 short questions using 4 pieces of discrete case study information. On the other side, you have your workings. Your working sheet allows you to have an Excel spreadsheet and a Word document. You can use your computer calculator, or like Esther said, you can use your personal calculator. The scratchpad is not a great asset, but it's good as a memory recollector. If you think, I didn't answer this question well, make a note on your scratchpad, and then you can go on and correct it later. So look at it this way, life is very easy, okay? So in your answer sheet, I mean, again, 5-6 years ago, you had to write almost like write an essay, but now the expectation is write small, clear, easily understandable paragraphs. If you need to do a working, go to Excel and do the working on Excel. If you need to write something, go to your Word document and write on the Word document. Don't do the same thing twice. You're not going to get double the marks because you did the same thing twice. If you do something on Excel, don't repeat it in Word. And obviously, if you do something on Word, don't go and write it back into Excel. You're only going to get the marks once. You can't get 200 marks. You can only get 100 marks, okay? So don't do the same thing twice. You're wasting time, okay? Use a calculator if you need to, or you can use your personal calculator. Like I said, Scratchpad is just good to make some memory notes. Other than that, you can keep working on Word. Spelling errors don't matter, but clarity matters, sensibility matters. How your storyline flows matters. So give a clear answer. Don't waste time and effort trying to correct spelling. Give a clear answer, and when the person reads it, the person realizes, okay, there's a spelling error, but what you're saying makes sense, okay? Remember, SBR is not a number crunching subject. It's a logical subject. Do you understand the accounting standards? And can you apply the rules of the accounting standards to prepare a set of financial information that is useful to the reader? So it's not about number crunching per se, but it's about your capacity to apply the rules of financial reporting, to provide the reader with, useful decision-making information. There will be number crunching to arrive at that outcome. So you need two skills. You need number crunching skills and writing skills, okay? But you're not going to get highly complicated mathematical computations to do. You're going to get very simple back of the envelope numbers to do. So you're not going to get detailed number crunching. Do your workings on the Excel spreadsheet. Do your writing on the Word document. Don't repeat, okay? Ultimately, you're going to give to the examiner two documents, an Excel spreadsheet and a Word document, okay? Right, that's the first thing I want to talk about. That's a general overview. Now, any questions? Let me just check my chat box. Where am I?
Dylan, there's a question from one of the students if they
Yes.
should start answering questions in the initial 15 minutes.
Of course you can. I mean, if you can read it in 3 minutes and you say, okay, I'm fantastic. This 1, 2, 3, 4, I'm ready to go. I'm going to do really well. Get on and answer it, okay? You don't have to wait 15 minutes and scratch your head. Of course you can. You can answer it when you're ready to answer it, okay? What happened to my chat box? Yes, so I got a question from Subhan says, how do you give references to Excel in the Word? So in your Word document, Subhan say, I'll show you an example when I move on, Subhan. You say, look, the net cash flow is 47,000. Refer to my working in Excel. That's all you do. Okay, you just say the net cash flow is 47,000. Refer to my working in Excel. No need to repeat. Okay. Any other questions? Yeah, good. Right. Let me now move to the second part of my 5 or 6 issues that I want to discuss with you. Let's take an example. This is not a hard example. Let's talk about revenue. I think all of you know this. The IFRS 15 on revenue is quite a new standard. It came into effect a couple of years ago, and examiners like to test you on new standards. So that's why I picked this up. There's high probabilities that you get questions with regard to the new accounting standards. Now, I don't think I need to tell this to you. You already know this now. IFRS 15 asks you to go through a 5-step process in accounting for revenue. Step 1 says, identify the contract, identify the customer. Like you went to a phone company and you went to Vodafone and you bought a phone. What's the contract? You are the customer, you bought a phone. Okay, what's the contract? What's the customer? Second step is identify the performance obligations in the contract. What did Vodafone do? They gave you a phone. They gave you the chance to take phone calls. They said you can browse the internet. You said you can listen to music. You can watch Netflix. You can do so many things. So you got 5 or 6 performance obligations. So identify the obligations in the contract. Step 3, what is the contract price? You're paying them $50 a month for the next 24 months. Okay, multiply that. That's the price. Step 4, the standard says, allocate the price to the performance obligation. So if you're getting 6 obligations and you're paying a price, allocate the price to each performance obligation. And finally, step 5 says you count the revenue as each performance obligation is satisfied. Now, this is not rocket science. All of you know this, okay? And when you go for the exam, they're not going to ask this. This is too easy. When you go for the exam, they're going to ask you to see whether you can apply this knowledge given a real life circumstance. So given a case study, they'll throw a case study at you, a small mini storyline, a small mini case study, and see whether you can apply this knowledge. Okay. So for example, in step 1, they will ask you, can you identify a single contract from multiple contracts? What do you do if there's a change in a contract? Is it a contract modification? Is it a replacement of the old contract with a new contract? Or is it an entirely separate contract? So you know all these things again, okay? So you have to understand the nuances of step 1, the nuances of step 2. What are the obligations? The nuances of step 3. How do you work the price? What if there is a discount? What if there is financing provided or financing given? I buy something from you and I pay you in 3 years' time. So I'm giving you, you're giving me 2 things. You're giving me a product and you're giving me 3 years of financing. How do you handle a trade-in? I buy a new car and I trade in my old car. Plus I give the dealer some cash. How do you handle a fixed price with a variable component? I'm building a factory for you for $5 million, but if I finish it early, you give me another $30,000. If I finish it late, you handle fixed price and variable price. So that's sort of where they'll test you. Step 4, how do you allocate the price to the obligations? How do you allocate a discount? Is it based on cost? Is it based on revenue? Or is it based on what we call the residual method? You know all these things, correct? And step 5, how do you count the revenue when the work is done? Is the work done over a period of time, or is the work done at a point in time? So if I bought an apple from you, it's done at a point in time. If I bought a maintenance contract from you, a 2-year maintenance contract, it's done over a period of time. So at the exam, they're going to test you on all these nuances of IFRS 15. So let's take an exam question. Right. This question is from the December 2019 exam. So let me try and explain this to you in terms of the CBE approach, okay? So I'm going to write now, bear with me. Can you see a red line? Maurice, can you see a red line?
Yes, Dylan.
Cool, thank you. So this is your question. This is your answer, okay? You're with me. So this is your computer, and on your computer, you break your computer into this sort of format. Left side of your computer is your question. Right side of your computer is your answer. So this could be an Excel spreadsheet, or this could be a Word document. This is where you write your answer. So let's read the question, okay? D sells music licenses to deliver music on demand. So you're doing this for D, okay? That's the company you're applying these rules for. What are you doing? You're selling music on demand. So on 1st January 2016, you sold a license to C, a 3-year license. So it's delivered over a period of time, 3 years, to sell music on demand to the public. So you sold it to C. So C could be maybe a company in Vietnam, and then C is streaming it to the people living in Vietnam. C paid you by giving you shares in that company, by giving you 7% of the shares of that company. And that company is worth $4.5 million. Plus, C will give you 5% of the income. Okay, and for the first year, the income was $1 million. Now, 1 year later, this investment has gone up in value to $6.5 million. So this is a case study given to you. And the question basically says, how are you going to account for this transaction? Okay, so you now read the question. So what you probably do now is you got the question on this side, and you got the answer. You got your answer sheet here, and you're going to ask yourself the question. Okay, now let me go through IFRS 15. What is step 1? Step 1 is identify the customer. That is C. Identify the contract. I'm delivering music on demand. What is step 2? Identify the performance obligation in the contract. There's one obligation. I'm selling music on demand. Then go to step 3. What is step 3? What is the price? The price is, there's a fixed component and there is a variable component. The fixed component is they're giving me something worth 7% of 4.5 million. Okay, what is that? So I've got a calculator here, as you can see. Okay, so you can see my calculator. So I'm doing like what you would do, 4.5 million into 0.07 comes to 315,000. So the fixed component is 315,000. The variable component is 5% of sales. Okay. So step 4 is allocate the price to the obligations. In this case, only one obligation. Step 5 is count the revenue when the work is done. So let me ask you a question. Let me ask you a question. Hang on a minute. Sorry. Is this work done at a point in time or over a period of time? Let me ask you a question. Is this work done at a point in time? Send me a message on the chat box, or over a period of time. Come on, be quick. Don't waste time. Send me a message. Is this done at a point in time or over a period of time? Come on, I'm waiting. Yeah, thank you, Cindy. So when I ask you a question, give me an answer quickly. It's done. Sorry. Over a period of time. Okay. So I've got to count this 315,000 over 3 years. So what I'll do is I'll take 315,000, divide by 3, and I'll count 105,000 every year. Plus, that's my fixed income. Plus, this year I'm going to get 5% of 1 million. That's another 50,000. So my income this year is 165,000. Okay, on that basis, that's how I will count the income this year. Then what has happened to me is, I'll just explain this quickly. The investment has gone from 4.5 to 6.5, the company's value. And I own 7% of that company. But that's not IFRS 15, that's IFRS 9, financial instrument. So I'm not going to value that on IFRS 15, I'm going to value that using the rules of IFRS 9. So you've thought about this now. Now, once you've got all this you've read we've taken some time, but we've read the question and we've got our answer ready. So I'm going to clear this now. Okay. And I'll do an answer like this. You see what I've done here. Again, let me draw a line. Let me draw a line here. That's my question. You're on the computer. And that's my answer. You're on the computer. So now I've got the question there. I've got my logic. I write this. So I write an answer very quickly. Step 1, the customer is C. The contract is for the sale of music. Step 2, this is a 3-year supply of services. Step 3, there is a fixed component of the price, which is 7% of 4.5 million, which is 315,000. And there's a variable component, which is 5% of the sales made every year. Step 4, there's only one performance obligation. Okay, so there's no need to allocate this price. And step 5, now how do I work my income? So the fixed income is 315,000, as you can see here. I'm going to get this over 3 years, as you can see here. So every year I'm going to count 1/3 of 315,000, which is 105,000. That's a fixed component. Then the variable component is 5% of 1 million. You can see that, which is another 50,000. So my total income for the year is 105 plus 50, 155,000. So you now type this in, like I've done, and this is your answer. Simple as that. Okay. So you can see here, if you want an Excel spreadsheet, you got an Excel spreadsheet there. If you want the calculator on the answer sheet, you can use the calculator. And if you want to make a note to come back to it later, you can use your scratchpad. I'll keep going. And now I go to the second part of my question, which is not to do with IFRS 15, but to do with IFRS 9. I'll write this as you can see. I'll say, in addition to the value of the shares in addition, sorry, the value of the shares in C has increased to 7% of 6.5 million. That is to say the shares are now worth 455,000, not 315,000. So there's a gain of 140,000. So my investment has gone up in value by 140,000. This is not to do with IFRS 15. This is to do with IFRS 9 because this is now in my books a financial instrument. So this gain of 140,000, I will take to profit as a fair value enhancement of my financial assets. So I write that down. Then I show the examiner the journal entries I would do. So you can see here the journal entries. So that's easy to do on a Word document. So my first entry is this. Debit the investment, where I'm getting an investment worth 315,000, and credit revenue received in advance by, I haven't still earned a cent. I'm going to earn it over 3 years, 315,000. After 1 year, I've earned 1/3 of that. So 1/3 of 315 is 105. So now debit the revenue received in advance, 105, and take to my P&L, that revenue is in the P&L, 105. Then I'm entitled to 5% of $1 million. That's another 50,000. So that company is going to pay me 50,000. Debit my debtor, my accounts receivable 50,000. Credit revenue 50,000. And the fourth journal entry is not to do with IFRS 15, but to do with IFRS 9. My investment of 4.5 million, that company's value of 4.5 million has gone to 6.5 million. I own 7% of that company. So my investment of 315,000 has gone to 455,000, up by 140. Increase the investment 140,000. Credit, you can either credit P&L or OCI. This is IFRS 9. IFRS 9 allows you the choice. If you want, you can take it to OCI. If you want, you can take it to P&L, 140,000. So you see how easy it is, guys and girls, okay? One side is my question, other side is my answer. In this case, I'm using the Word document, and I've thought it out, and now I'm keying in my answer. Okay, any questions, anybody? So Kenny is asking, is it P&L or OCI? Kenny, it is your choice. When you buy a new financial instrument, you can make a choice as to whether it's going to be valued at fair value through P&L, or whether it's going to be valued at fair value through OCI. Okay. Yes, Columba is saying, yeah, so you don't have to waste your time explaining IFRS 9 and IFRS 15, just hit the nail on the head, get to the point. Like I said, step 1, who is the customer, what's the product? Step 2, step 3, step 4, step 5. Don't go to write a thesis on IFRS 15, the examiner knows it and the examiner expects that you know it, okay? Cool. Right, that was my second of 5 areas I want to discuss. Let's keep moving. Sorry, so, okay, I'll let that go. Let's keep moving. Another new standard is IFRS 16. IFRS 16 has been with us for less than a year actually, and companies are now getting to grips with IFRS 16. Most large companies still don't know how to handle IFRS 16. Okay, it's a high probability area that the examiner will ask you IFRS 16 to see whether as you young accountants come into the marketplace, whether you can go into companies and help companies to resolve the accounting issues to do with IFRS 16. So you need to understand the implication of IFRS 16. So in a lease, there's a lessor and there's a lessee. From the old standard to the new standard, nothing changed in the books of the lessor. The old way and the new way remains unchanged for the lessor. But there are massive changes for the lessee. Before the new standard, the lessee could say, look, this is either a finance lease or this is an operating lease. And most lessees prefer to say it's an operating lease where it was kept off the balance sheet. Operating leases didn't come to the balance sheet. So it helped the ratios. Okay, so that's why people realized they were playing games with the numbers and keeping these leases off the balance sheet. So to force the companies to get the leases onto the balance sheet, IFRS 16 was implemented. Now there is no escape. You can't keep a lease off the balance sheet. You got to get the lease onto the balance sheet. And it's happening as we speak. When companies report their results now, in March, in June, in July, they are using IFRS 16 for the first time. You need to understand IFRS 16 from the point of view of the lessee, because the lessor, like I said, it's not very different. What the standard requires you to do is to compute an asset called the right of use asset. The asset is your right to use this building or this plane or this ship or this truck or this computer for a period of time. And in exchange for that asset, you got to pay somebody a lease payment. You got a lease liability. So what the standard says is you must show your lease asset on the balance sheet and you must show your lease liability on the balance sheet. And the standard gives you some rules on how to value the right of use asset and some rules on how to value the lease liability. So that's where the examiner can test you. Do you know how to value and apply the rules of how to compute the right of use asset and the lease liability? Okay, and I think you know this. You should, okay, this is pretty much like very basic. Okay, the lease liability is measured, I think you know this, at the present value of the future lease payments. So you discount the lease payments to get its present value. At the exam, they're not testing your skills on discounted cash flow. They will not ask you to discount and work out a lease liability. Then they'll give it to you. They'll say the lease liability is so many dollars. Okay, or they might ask you the theory as to how you discount. Do you use the rule says the interest rate, as I've said there, implicit in the lease. If you don't know the interest rate implicit in the lease, then the rule says use your company's incremental borrowing rate. What will the bank charge you if you went to the bank to take a loan for 2 years or 3 years, as the case may be, depending on the life of the lease. Once you know the lease liability, you can work the right of use asset. I've written it there for you. The right of use asset is measured at A, the amount of the lease liability, plus B, any payments made in advance, plus C, any extra cost of installing that asset and making it workable, plus D, the present value, today's value of exiting this lease on the expiry of the lease. Okay, so they can just ask you a theory question: how do you measure the right of use asset? A theory question: how do you measure the lease liability? Or they may give you some numbers and ask you to apply it. Okay, let's take a question. So this question again, so again, you get the logic here. So this is how you do it. So you're doing a computer-based exam. This is your question. That's your answer. So that's how you're going to do it. So you got the question on the left-hand side. You got the answer on the right-hand side. So this question says, let's take an example. Sorry, my fault. So this question is from the March exam. The question says, okay, I've just put a summary of it. Discuss some of the key changes to the financial statements that investors will see when companies start to apply the lease accounting requirements of IFRS 16. That's all the question is asking. Discuss. So it's no number crunching at all in this case, in this March 2019. So that's almost more than a year old. Okay, but today they may give you some numbers to crunch. Okay, so this is the early stage. What's the implication? So you got to think now, what am I going to talk about? I'm going to talk about what's going to happen, what's the implications on the balance sheet? What's the implications on the profit and loss statement? What's the implications on the cash flow statement? Then you already have this knowledge, you're now ready to go. So now you start your Word document and you write the implications on the balance sheet, the P&L, and the cash flow statement. So let me show you what I've done as an example. So again, you can see what I've done there. And this is what you're going to be doing when you sit for your exam, using this, if you're doing it on the CBE basis, which Australians and New Zealanders are doing, and all of you will be doing soon, okay? So easy. You don't need a pen, you don't need a paper, you don't need a calculator, you don't need anything, you only need your computer. So easy. It actually makes life easier. And you don't need to write zillions and zillions of pages, write brief to the point, answers, and life is actually much easier under CBE than under the paper-based exam. So that's your question, that's your answer. So again, it's a Word document. So I've written my answer there, okay? So you can see if you're at the exam, you'll be typing this furiously. Investors will see significant changes in the financial statements post-implementing IFRS 16. Let's examine the impact on the statement of financial position, the balance sheet. So you can see what I've done. I'm going to first talk about the balance sheet, okay? Prior to implementing IFRS 16, the leases could have been classified as operating leases and kept off the balance sheet, i.e. not shown at all on the balance sheet. So you're giving the background there. Post IFRS 16, all leases must be shown on the balance sheet. And I'm telling the examiner, look, I know my onions. This is what I'll be doing. For a new lease, I'll be doing this. I'll be debiting an asset called the right of use asset. I'll be crediting a liability called the lease liability. So the assets on my balance sheet, the liabilities on my balance sheet. Then every year, this is an asset. So the asset gets depreciated. So every year I'll depreciate the right of use asset. So the right of use asset goes down. I create a provision for depreciation, right of use asset, and I expense it to my P&L. I have a depreciation charge. And then every year, I will amortize my lease liability. So when I pay the lease payments, obviously credit cash, you can see there credit cash, and debit the lease liability. And every year, I will amortize my interest, debit my interest expense in my P&L, and increase my lease liability. So you start with the right of use asset, you know this. If that's a graph, you start with the right of use asset of so much, and over time that goes to 0. And you start with the lease liability, again, of some amount, and over time it goes to 0. So that's how you will handle it in your balance sheet. I keep writing. So this is my answer, okay? I'm just taking two or three slides. I next look at the impact on the statement of profit and loss. So prior to the introduction of the IFRS 16, in the books of the lessee, the lease would have been expensed to an expense called lease rent. So all these shopping centers, what they did is they credited cash and debited rent. But now they can't do that. Now because they have the asset and they got the liability, now they have to do two journal entries. One is to depreciate the asset, the depreciation expense. So you're writing this to the examiner and telling him how, showing him that you know all about lease accounting. One is the depreciation expense. So like I showed you earlier, debit depreciation, credit provision for depreciation. The other is the interest expense on the loan. Debit interest expense, credit the lease liability. Keep going. You then go to the cash flow statement. So you're now typing your answer here, okay? So you see what I've done? I've done it for you. You're now furiously typing your answer. Finally, let's look at the impact of this impact of the statement of cash flows. Prior to the introduction of the IFRS 16, the lease rent paid would have been shown as an operating cash flow, you know, the operating cash flow, okay? Now, post IFRS 16, the acquisition of the right of use asset is shown as an outflow in the investing cash flow. And the receiving of the lease liability is shown as an inflow in the financing section of the cash flow. When you pay the leases, it's shown as an outflow in the financing section of the cash flow. So you explain to the examiner, this is how you do it in the balance sheet, in the P&L, and in the cash flow statement. So you see, it's so easy. You're just taking your Word document and you're giving the answers, okay? I don't want to talk for too long. The same question, second part. So this is again the question from the March exam. The second part of the question says, what's the impact on ROCE? That's the question. What's the impact on ROCE? And then again, you have your answer sheet there. You show the impact on ROCE. So what is ROCE? ROCE is profit divided by capital employed. Okay, let me ask you a question. When the lease asset comes on the balance sheet, what do you think? Do you think the capital employed goes up or the capital employed goes down? Let me ask you that question. Send me a message on the chat box quickly. When you bring the lease on the balance sheet, does the capital employed go up or the capital employed go down? What do you think? Send me a message on the chat box quick. Come on, send me a message in the chat box quick. Does the capital employed go up or the capital employed go down? Goes up. Thank you, Kenny. Goes up, okay? Because you're bringing an asset onto the balance sheet. You bring a liability also, but in most instances, the asset is more because you paid a deposit or you prepaid some rent, okay? Goes up. So if capital employed goes up, and we don't know what will happen to profit, most likely what will happen is ROCE goes down. That's why most companies want to keep it off balance sheet. They want to show high ROC to their shareholders. Okay. So again, very quickly, I'll give an answer something like this. So again, this is a Word document. I'll write it like this. Shown below is the impact of IFRS 16 on EBIT. And I've got two columns there. One column is after IFRS 16, other column is before IFRS 16. So before IFRS 16, there was lease rent. You can see the X there for before. Now, after IFRS 16, there is no more lease rent. In place of that, you have the depreciation of the right of use asset and the interest on the lease liability. So I've called it Y and I've called it Z. So before you had X, now you don't have X, you have Y and Z. That's the impact on profit, the top line, profit. Then look at the impact on capital employed. Before IFRS 16, it was not on the balance sheet at all. Nothing on the balance sheet. You can see that there, nothing on the balance sheet. After IFRS 16, you got a right of use asset. I've called it A dollars on the balance sheet, and a lease liability. I've called it B dollars on the balance sheet. And I'm going to explain to my examiner. Hence, what IFRS 16 does is that it increases the amount of capital employed in the business because now the asset and the liability are on the balance sheet. Previously, they were off the balance sheet. Hence, the ROCE ratio post IFRS 16 is worked on numbers that are very different to before IFRS 16. Usually, again, you can't put your hand on heart and say it, but 99% of the time, ROCE goes down because of the large increase in the right of use asset being recognized. So you see how easy it is to answer a question on the CBE platform. You just have the question on this side, you got the answer on the right-hand side, and you're typing in an answer. Okay, clear? And I've got this as an example. This is from the accounts of Singapore Airlines for the year ended 31st March. This is interesting to read. This is Singapore Airlines financial report for the year ended 31st March 20 compared with 31st March 19. This is their balance. This is a note to their balance sheet, note 22. You can see here in the year 20, they're showing an asset of $1,477 million because it's all the aeroplanes. What did they show last year? Nothing. This year they're showing a liability of, so current liability is 493, non-current liabilities $1,467 million. Altogether the liability of nearly $1.995 million. What did they show last year? Nothing. So you see how huge the impact is, IFRS 16. From nothing on your balance sheet to $1,477 million on your balance sheet, okay? And in note 22, they explain what are the different types: aeroplanes, spares, engines, property leases, land and buildings, plant and equipment, computer equipment, and so on. And then they go on to explain that before IFRS 16, what did they do? They classed all this as operating leases. So this is a real life example of Singapore Airlines before IFRS 16, after IFRS 16. Okay, any questions on IFRS? Any questions on what I've said? I'm not saying anything hard, guys. I'm just saying, actually what I'm saying is actually very easy, okay? Any questions, anybody? All good? Right, keep moving. So the next thing I want to talk about, how am I going for time? So I don't want to, is let's talk a bit about IFRS 10. You're going to definitely get a question on concept of control, okay? So consoles is a guaranteed question, and in consoles, the question of control is guaranteed. So what are the standards you're studying here? You're studying IFRS 10, consolidate, how to do console financial statements. You're studying IS 28, how to account for associate companies and joint ventures. You're studying IFRS 11, how to account for joint arrangements. Again, you probably know this as much as I do, okay? You know the meaning of control, you know the meaning of significant influence, you know the meaning of joint control. All of you know that. You probably know exactly as much as I know. IFRS 10 defines what is control. What does control mean? Control means you have power over the investee. You have an exposure or a right to a variable return from that investee, and you have the capacity, the ability to use that power to influence the return. So if I have 100 shares in Singapore Airlines, I don't have control. If I have 100 shares in Singapore Airlines, I don't have power over Singapore Airlines, and I don't have the ability to tell Singapore Airlines what to do. But if I have 52% of Singapore Airlines, I've got it. I've got the power over Singapore Airlines, and I have the ability to tell the chairman or the CEO what I think they should be doing. Okay, so that's the meaning of control. Control means you've got power to influence the behavior of that company. Significant influence means you don't have. It means what it says. You don't have power, but you have influence. So if I own, say, 20% of Singapore Airlines or 10% of Singapore Airlines, I could probably go and say, look, but I've got 10%. I need to have a say here. Look, don't buy Boeing, buy Airbus, or don't do this, don't serve this coffee, serve that coffee on the plane. I've got significant influence. So at some point in time, and the standard usually says if you've got more than 20% of the shares, you're deemed to have significant influence. Joint control is a third concept. Joint control means both parties have equal power. If you and I are in a business and we have joint control, I can't do anything without you agreeing. You can't do anything without me agreeing. So you got all this knowledge in your head before you go for the exam, okay? Now when you go for the exam, they'll ask you a question. That's what the examiners do. They'll ask you a question. And this is a question from, again, I took March 2019. And I'll read the question very quickly. C owns 45% of K. So 51% means control, correct? But here it says C owns 45% of K. K has 4 other shareholders. So therefore, they're altogether 5 people. You own 45%. So you're the biggest, most powerful of them all, okay? The other 4 people own 55%. K is a property developing company. So C is not an expert on property development, but C can appoint 4 of the 8 directors. That is, you can appoint, so you've got 45% of the shares, but you can appoint 50% of the directors. Now, for a decision to be made, there needs to be a majority of the vote. So 5 of the 8 directors need to say okay before a decision is made. So you got 4 of the 8 directors. So if all of your directors agree on something, but if the other 4 don't agree, the decision won't be made in your favor. You need 5. If you can get one of them to come on your side, you can get a decision in your favor. But there's no guarantee you can do that. So you can always veto a decision, because if you got 4, the other side will never win. You're with me? If you got 4, the other side can never win, because the most they can get is 4, but they need 5. So if you go for the other side can never win, but you don't always win, because the other side can say no. If 4 say no and your 4 say yes, nothing will happen. So you can never lose. You can never lose, but there's no guarantee that you will always win. That's the circumstance here. So the directors of C are asking you for your advice on the relationship between C and K. So the question they're asking you is, do they have control? Do they have significant influence, or do they have joint control? So you can see again, so this is your computer. So easy. You got the question on this side. You got the answer on this side. That's your Word document. So you will read the question now, and then you will put your thoughts together, and then you will present the answer. You'll talk about 3 things. You'll talk about control. You'll talk about significant influence. You'll talk about joint control. And so let me show how I've done it. So you see what I've done there. I've got the question on one side, on the left-hand side. This is my computer screen at the exam. I've got the answer. I've got the blank Word document on the right-hand side, and I start putting my answer. I type it in. I say like this. Let's first examine if C controls K. So my first aspect is there control, and I write like this. If the other 4 directors of A who own 55% of the shares act together, they can effectively block any decision made by the directors nominated by C. C owns 45% and the other parties in total own 55%. Hence, in the event of a shareholder vote, if the other 4 parties get together, they can outvote C. Hence, C does not have control over K, applying the rules of IFRS 10. So No big deal, guys. Just 1, 2, 3, 4 sentences. I've scored all my marks. I'm not writing pages and pages and pages. I'm not rewriting the textbook. I'm doing nothing. I'm just hitting the nail on the head. I've got the case study there on the left-hand side. I've got my thoughts together and I'm ready to write the answer. So in 4 or 5 sentences, I've hit the nail on the head. I say, look, these are the facts here. C does not control K. Then I go and say, look at the joint venture. IFRS 11 defines joint control as a circumstance where all the parties must agree before a decision can be made. In this case, it requires all the parties to agree to a decision before a decision can be made. That is clearly not the case here. As long as 5 of the 8 directors agree, the decision will be made. So the 3 that don't agree, damn them. If 5 agree, the decision goes ahead. Hence, so there is no need for all 8 to agree. Hence, K does not meet the definition of a joint venture as required by IFRS 10. So you see, in 3 or 4 sentences, I've got to the point and I've said, look, this doesn't meet the requirements or the definition of a joint venture. So I've said it's not. There is no control here. There is no joint venture here. So I'm writing my answer again. So this is the Word document I'm writing now. I say now, finally, let's consider if C has significant influence over K. If the 4 directors of C get together, they can veto any decision made by the other directors. So the other people can never have their way. You could write that if you wish, okay? If the directors of C do not agree. Also, in terms of share ownership, C owns 45% of the shares, which is a significant holding, well above the 20% threshold guideline of the accounting standard IAS 28. So you're referring to the standard just to show the examiner you know the accounting standards, okay? So the other side can, like I said, they can never have their way if you don't agree. So based on these 2 facts, we can conclude that C has significant influence over K. So not much to write, very easy to answer. Use your WordPad, yes, use your Word document and you're typing 3 subsections. Is there control? No. Is there a joint powers? No. Is there significant influence? Yes. Okay. Clear? Okay. Any questions on this concept of control? Anybody, all of you? Any questions? So if you have any questions, ask me. Cool. Right. Let's take a question on cash flow. So all these 3 questions I've done so far is I've used the Word document. And remember, when you go for the exam, you're not going for an exam to do complicated number crunching. You're going for more or less a question exam that's more theoretical than numerical. The examiner wants to see, do you understand the concepts? Can you apply the concepts? Can you explain the concepts? So you'll be writing more than number crunching. I think in the scale of 3:1 or 4:1. For every minute you spend on number crunch, you spend 4 minutes on writing, okay? But let's do this one, only because this one looks at a spreadsheet. So here again, on the left-hand side, I've got the question. Let me draw a line just to show that to you. On the left-hand side, I've got a question. And on the right-hand side, I'm ready for my answer. So this is a numbers question. So I'll read the question to you. Information concerning the property, plant, and equipment of A company is detailed in the table below. During the year, property, plant, and equipment, which had cost $80,000, with a carrying amount of $30,000, was sold for $20,000. The profit for the year is $300,000, and this is my opening balance sheet. That's my closing balance sheet. I started with plant worth 180. I ended up with plant worth 240. Opening depreciation was 120. Closing depreciation is 140, which means my WDV is 180 minus 20 is 60, and 240 minus 140 is 100. No other cash activities. What is the cash flow for this company? Okay, so you're going to go to Excel. Okay, because you got to do some numbers here. So I think even before you go to Excel, you know quite easily. So you got here for the, okay, I'll move on. So let's go to Excel. So I'll show you what I've done. So again, So I'm in the CBE environment. I'm just doing my answer on a computer screen. So that's my question. And now my answer, in this case, I'm going to use Excel. That's my answer. Not Word so far. Okay, I still haven't gone to Word. I've just opened my Excel spreadsheet. So I'll do this working. You can see the working. It's the numbers I'm doing are not very difficult. Okay, it's easy for you. So you can see my workings here. I started the year with $180,000 of plant. I sold an item worth 80,000. So minus 80,000. And I end up with 240,000. So I started with 180. I sold 80. So 180 minus 80 is 100. But I end up with 240. So I must have bought for 140. So I can write up this account in an Excel spreadsheet very quickly. And you can see I put it in with a yellow sort of shading there. My additions is 140. If I buy plant, you know, money goes out. Okay, so it's a negative cash flow. Money goes out. I do the same for my depreciation account. I start the year with 120,000 of depreciation. I sold an item which was depreciated by 50,000. Okay, I'm going a bit fast, but you understand what I'm doing here. Cost is 80, WDV is 30, so provision must be 50, correct? So I sold an item with a depreciation charge of 50,000. And after doing that, my closing depreciation is 140. So again, look at the numbers, very easy. Start with 120. An asset goes out the window, that's depreciated by 50. So 120 minus 50 is 70, isn't it? 70. But I end up with 140. How does 70 become 140? I must have put additional depreciation of 70. Okay, so I've got my additions, which is 140. I've got depreciation, which is 70. Now, you can see here, let me put a different color. The cost is 80, the depreciation is 50, WDV is 30. I sold it for how much? I sold it for 20. So if an asset costing 30 is sold for 20, I have a loss of 10. I have a loss of 10. You know from your knowledge of cash flows that the loss is not money going out and the depreciation is not money going out. And you know from your knowledge of cash flows that the sale proceeds is money coming in and the purchase of assets is money going out. So I've got all my facts here. So I can work out, I'll highlight it for you, my operating cash flows. My operating cash flows is, my accounting profit is, I'll put a different color again. My accounting profit is 300,000. My accounting profit is 300,000. That is after charging a loss on disposal of 10,000. That's this gap here. So add 10,000. And after charging depreciation of, we worked that already, 70,000, add 70,000. So my cash flow from operations is 300 plus 10 plus 70, 380,000. My investing cash flow is money going out. I bought a new plant for 140,000. Money coming in, I sold some plant for 20,000. So 140 out, 20 in is 120,000. Out, okay, out. Like I said, now that is your answer to the examiner. In this case, you're not giving a Word document, you're giving an Excel spreadsheet, because this question is very suitable. A cash flow statement is very suitable for an Excel spreadsheet. But then what you'll do is you'll now, okay, so change color again. So this is my answer, my Excel spreadsheet. And now this is my answer in my Word document. So I'll now go to my Word document. So it says this question number 3, part 2. I'll just now say, so this is my question number 3, part 2. And this is my answer in my Word document. I'll write this. I'll say cash from operations was 380,000 inflow. You can see there. That's all I will say. I will not say anything more, nothing more. Why waste my time? The examiner is smart enough to see that you understand everything about cash flows, but you got the right answer in the Excel spreadsheet. So don't repeat it. Time is valuable at the exam. Spend your time and get the answer right. Don't waste your time doing the same thing twice. You don't get the marks twice. So all I say in my Word document is cash from operations is 380,000. Cash from investing activities is minus 120,000. Don't forget the minus. That's important. Okay. Other than that, that's all. That's important. Investing activities is minus 120,000. So my net cash flow from operations is 260,000. 380 minus 120, 260,000. And I'd say here, you can see what I'm doing. See spreadsheet for workings. Okay, so the examiner will, all he sees this line and he say, look, this is right, this is right, this is right. Fantastic. This guy or this girl deserves full marks. But let me see what he's done or she's done. That's great, that's great, that's great, that's great. 100 out of 100. Okay, so easy. Actually, much easier, guys. Much easier than paper-based exam. Okay, because on one you can very quickly type it in, and it's easy because if your handwriting is bad, if some people have nice handwriting, some people don't have nice handwriting. Then here there is no handwriting bias because it's just typed in. So for the examiner, it's easy. They don't have to. If you made a writing error, it doesn't penalize you in any way. They can see here you got your answer right. So you actually got better chance of scoring marks in a CBE exam because you don't have the issue of bad handwriting. Okay, any questions? Anybody? I know I'm going a bit fast, but okay. But I mean, what I'm doing is nothing especially hard. Okay, I'm not doing anything that's difficult. Any questions? Anybody? Everyone's quiet. WDV Cheryl is written down value. Okay, so cost less depreciation is written down value. So I just wrote that as a short form. Okay, everybody okay? Silence. Everybody is silent. I hope silence is good. Right. So you see what I've done. I've shown you 4 examples. Okay, revenue, leasing, control, and a cash flow. How you answer the question in a computer-based environment. On the left-hand side, you have your question. On the right-hand side, you have your answer. If your answer is a Word document, just type it into the Word document. If your answer requires a spreadsheet, open the spreadsheet and type it to the spreadsheet. If you do a spreadsheet, then go to the Word document and write a few sentences saying, look, this is the final result. Please refer to my Excel spreadsheet for the detailed workings. Okay, before I stop, okay, so before I go to the last section, I'll give you a minute. Any questions, anybody, before I move to the next part, which is my last part? If you have any questions, send me a message on the chat box. So far, no. I hope that's good news. And okay, so I hope this has been useful. All I'm trying to do again is I'm trying to emphasize to you what Esther said. What Esther said is general, but I'm trying to put that into specific circumstances as to how it applies for your business reporting exam. Okay, again, I'll repeat myself. You will get 4 questions. Don't look at it like 4 long, difficult, challenging questions. Don't do that. Break each question up into its simple, small components. Like I said at the start, there'll be a long question, but they'll be saying, look, banana did this, apple did that, mango did this, orange did that. It's like a case study. Then look at what they're asking. They're asking 1, 2, 3, 4, 5, 6, 7 things. Then go to your Word document or Excel spreadsheet and answer the first part, second part, third part, fourth part. Life is easy. You will do well. You will answer your exam well. You will get a good mark. So you can see here again, left-hand side question, right-hand side answer. In this case, there are 2 workings here. One is an Excel spreadsheet, other is a Word document. Okay, just another 5 minutes and then I'll stop, okay?
And just before you proceed, Cheryl actually has got a generic question in the box which it says, in exams, should students be using abbreviations like OCI?
Of course. Yeah. What's the point in typing other comprehensive income? Okay. When everyone understands what OCI is. It all depends on this. Again, depends on circumstances. If you're asked to prepare a financial report for a listed company, you're going to say other comprehensive income. Okay. So if you go and look at the Singapore Airlines accounts, Maurice, they will say other comprehensive income. To do a journal entry at the exam, OCI is fine. Okay, OCI is fine. So abbreviations are fine. Okay.
Thanks, Dylan.
Is that okay? Am I clear?
Yep, thank you.
Any other questions? Anybody else? Right. Then let me just 5 minutes on one final thing I like to talk. Not I like to, but you need to know. When you go for the exam, they won't ask you about COVID-19 because COVID-19 is new. It happened in February, March, and we are now in July, August, and it's sort of been a bit ongoing. Okay, the exams that you're going to sit were probably prepared last year, because ACCA, it's a bureaucracy. They would have done these exams probably 8-9 months ago, tested it, double tested it, triple tested it 4 times before they gave it to you. Okay, so they're not going to ask you a COVID specific question, but you can always show off your knowledge. You can always show the examiner how good you are, how much you know, how wonderful you are. Okay, and I'd like to talk about a few things to do with how COVID-19 actually COVID-19 has massive implications on business reporting. Nearly every standard is affected by COVID-19. Okay, let me just spend a few minutes and just discuss some of the key issues with regard to COVID-19. The first issue is, from your conceptual framework, the conceptual framework, COVID-19 puts the going concern concept in doubt. When you prepare accounts, when you prepare your balance sheet and your cash flow statement, you're preparing the accounts on the basis that the business is a going concern. For many businesses, businesses in travel, tourism, hospitality, certain agricultural businesses, the future of the business is in doubt. So COVID-19 puts the going concern concept into play and puts the viability of the business in doubt. Okay, so what a going concern concept means is that we are confident that the company will continue into the future. How does COVID-19 impact on that? It basically, what you have to say, if they ask you a question on going concern concept, you can always throw in a sentence on COVID-19. Say, look, under these special circumstances, the going concern concept is valid only provided that the company can successfully work its way out of this current economic issue arising from the health issue. Okay, it's going to have massive impacts on IAS 16 measurement of property, plant, and equipment. So asset values have collapsed in certain industries. The value of property has collapsed, plant and equipment has collapsed. Will that come back again? Or is that collapsed forever? So certain assets might have collapsed and they might never come back again, right? And certain assets might have fallen in value, but they might come back again. So like, for example, Singapore Airlines Boeing 747s, they have decided to scrap. Okay, so massive assets are just they have decided to scrap. Okay, Qantas in Australia, same thing. They've just, parked their fleet of Boeing 747s, never to fly again. Goodwill is decimated for most companies. Patents, trademarks, have they gone up in value? Have they gone down in value? Okay. You know what impairment means? Impairment is a temporary fall in the value of an asset due to some special circumstances. It could be internal, it could be external. So COVID is an external event causing asset values to fall. Okay, so COVID will cause goodwill to be impaired. You know the rules. Goodwill once impaired cannot be reinstated. So you've got to explain the impact of COVID on impairment. It's going to impact on IFRS 9. Bad debts, basically bad debts. Bad debts. So you're like me, my spelling is bad. Okay, so thank heavens for a computer-based exam. They don't do a spell check for me. What do banks have? All the banks have defaulting loans. People who bought houses can't pay their mortgage. Businesses that took loans can't repay their loans, can't even pay their interest. So what do banks have? Banks have massive bad debts. So banks have got to report as part of IFRS 9, you must have done this, a stage 1 bad debt, a stage 2 bad debt, and a stage 3 bad. You must have done this. Stage 1 says provide for 1 year's likely bad debts. Stage 2 says provide for a lifetime's likely bad debts, but continue to charge the customer interest. Stage 3 says provide for a lifetime's bad debts and also stop charging the customer interest. Okay, so you know those 3 levels: level 1, level 2, level 3, provisioning for doubtful debts. Okay. Now, how do banks explain the special issues with regard to COVID? Not only banks, even any company. If I'm selling something, the customer might say, look, I'm a hotel, my hotel is closed. I'm really sorry, Dylan, I can't pay you. Much as I love you, I can't pay you. So I have a bad debt, So not only banks, but for banks, it's very serious how the impact of bad debts is. So you can see that. So COVID is going to make companies make lots of provisions for all sorts of, issues that are arising, liabilities that arise. Sometimes you might not make a provision, but you might disclose a contingency that in the event that we don't come out of COVID in the next 12 months, I will have to, write off, these assets or make provisions for these liabilities. Employee benefits is an interesting one because right around the world, in Australia, in England, I'm not sure about Malaysia, but in America, in Europe, what governments are doing is governments are giving companies gifts, grants. In Australia, the government is giving every company that is doing badly $1,500 per employee per month as a gift to support the company and keep the employee employed. In England, in Australia, they're giving $1,500. In England, they're giving a gift equal to 80% of the person's wages. So if you're earning £100,000, the government is saying, look, I'll give you £80,000. You only pay the guy £20,000, but don't fire him, keep him employed because we don't want to have unnecessary unemployment. So there's a new thing that never ever happened before. Governments are giving you money to pay your wages. How do you show that in your financial report? So so what IAS 19 says is, explain that as a note to the account. So don't go and put that in the face of your P&L and complicate your P&L too much. But in your notes to the accounts, put a new note saying how much of my wages has been subsidized by the government because of COVID-19 related employee subsidization, gifts or grants or whatever you want to call it. I just talked about leases. So what many retail companies are facing is no one is coming to their shops. Like if you're an airline, if you're like a travel agency, for example, you can't travel. So if you've got a travel agency, down the street, nobody's coming into the travel agency. So there's nobody opening your shop. The shop is closed. Then you can't pay the rent. If you can't pay the rent, your right of use asset, like we discussed, and your lease liability has to be reconsidered. So what do you do? Is it temporary? Is it permanent? How are you going to, is it a bit of both? How do you handle it? So, the COVID-19 impacts on nearly every standard and impacts on nearly every circumstance. When you go for the exam, they won't ask you about COVID-19 because, like I said, the exam was set before COVID-19 started. But you can show the examiner how smart you are, how good you are, how much knowledge you have. But because when they ask about, employee benefits or leases, or if it's relevant to do with valuations, your exam is all about how you measure, this, correct? And how you present. And of course, how you recognize. So the main issues for any asset or any liabilities, how do I recognize it? How do I measure it? And how do I present it? And COVID is going to impact on that. What does COVID do to my recognition? What does it do to how I measure it? And what do I need to present extra to explain COVID? So I just thought I'd talk about COVID with you a little bit so that you can always use that and impress the examiner with your good knowledge. That's all I had to say. I hope I have been useful. But essentially what I want to say is I just want to pick up from where Esther left and say, look, I'll repeat myself one more time before I stop, okay? I want to pick up from where Esther left and say, look, this is your worksheet at the exam. This is your computer at the exam. Put your question on this side, put your answer on that side, read the question and write the answer. You can use an Excel spreadsheet if you like, use a Word document. My personal view, and I could be wrong, it depends on each of us, is you spend much more time here than you would spend here because our exam is not anymore about number crunching, it's about understanding the theory. So again, I hope I have been useful. Do you have any final questions before I say goodbye? Anybody, any final questions before I say goodbye? No? Okay, then thank you everybody. It's been my pleasure to get to know all of you. And let me take the chance to wish you wish you very well in your exam. Okay, so I hope you all do well. Thank you very much. I'm going to stop talking, and I
Thank you,
guess
Mike.
unless Maurice has got something to say, we can all go home and enjoy the rest of our Fridays.
No, I just want to, perhaps on behalf of the students, really thank you, Dylan. And we can see that the number of attendees has actually not dropped all throughout this time that you had spoken. So it's really testament that the students are really getting a lot out of this session. And we can see in the chat box lots of students thanking you for your efforts. So thank you very much for doing this also at a very late time in Sydney. So just want to reiterate as well. So Dylan is from the Australasian Business Institute. So there's the website over there as well. So for students who are interested to find out a little bit more about ABI, please do so. Please do bear in mind what Esther has mentioned. I hope this session has helped to allay your fears about what the computer-based exams would be like. So please use this session to practice, use the practice platform, and I'm sure all of you will do very well. Esther, have you got any last thing to say before the students go?
Yep, just want to wish everybody the best for your exam. Take care and be safe. Bye.
Thank you, everyone. Thanks, Dylan.
Thank you, Maurice.
Thanks,
Thank you,
Esther.
Esther. Thanks, everybody. Bye.
Bye-bye.